Good afternoon, everyone. It's 20 past 3 here in the UK on Tuesday, the 5th of January 2021. A very, very bleak and wet afternoon in West London. Well, markets came off yesterday, and they came off in some style yesterday. I don't, for a moment, believe that I understand American politics, but Wall Street markets opened at a record high before falling to two-week lows because of concerns, I believe, of the darn virus and, of course, today's runoff elections for the US Senate. So, two elections in Georgia, and voters will effectively decide whether the Republican Party retains control of the Senate, and investors believe, so Goldman Sachs tell me, that Republican control is more positive for markets. It would seem that the Republican Party's lead narrowed yesterday, and that they feel in fact explained the sell-off. So what happened is that we've moved to a down-up situation. We closed like that yesterday, a down-up situation on the Vector-based composite. Today, a different story. Advances up significantly above declines, and the color guard is mildly bullish. So not a day, I don't think, to do anything until we see a change in the short-term trend. If we have a look at the Vector-based composite and pull that up, we can see that it wasn't entirely a surprise, because if I in fact bring up the MTI layout, I can see relatively easily over the 6-month view that we had this very strong divergence in the MTI, between the price and the MTI, but maybe more importantly is this divergence that we have between the price and the buy-sell ratio. Okay, and the buy-sell ratio above 5, both of these metrics in a mega overbought situation. Nevertheless, these today's lows seem to be holding. So let's just have a look at the S&P 500, which is, you all know by now, is a market that I actively trade myself. That's the market yesterday opened at a new high, as you can see, and it was up very strongly in the pre-market, and then all of a sudden it came back, and it came back exactly to the zone between the 21 and the 55, which I've talked about previously. It also came back to this trend line. And for those of you that are Fibonacci followers, I know that not everybody is, but if you put a fib on there and you go from here to here, we can see that that's exactly 78% of that range. So we had a confluence of this trend line and that 78% level, and that was a good place for those people that believe the market is going to keep going to buy it, and that's exactly what they did. That's the reason it stopped there, folks. That's where the orders were. It didn't stop there by magic. It stopped there because that's where the orders were, and the orders were based on that simple little construction that I've just in fact showed you. So I think if you ever look at a chart, one of the most useful things that you can say to yourself is, where are the orders? And the trend is up, and the orders were in fact just clustered down here, and the market broke up quite strongly, and it's now sitting at 3709. Going to be very, very difficult to get an entry as I record this. So I'm reasonably positive. I suggest you don't do anything until the short-term trend turns up. I have some positions, maybe not the best start of the year, and I have positions. I got stopped out of apps for a small loss yesterday, and I think that my entry last week was a little opportunistic, and I got stopped out of Amazon at entry, and again my stop loss was probably a little bit too tight. I'm very, very happy with FUTU, and let's have a look at all of these I spoke about these yesterday at the VectorVest Q&A in the UK, and that is, folks, why I keep talking about a spring, a Wyckoff spring. When they work, you feel as if you're the master of the universe. And I couldn't resist this when I saw this last week. And as you can see, there's the old high. Came back once. And you could certainly have bought it there, and if you did, well, you would have, in fact, probably got stopped out or maybe sweated a bit until it turned. But when the market comes back into the zone and goes down below those lows, and then it springs and it goes from 40 to 55 in 2 or 3 days. That's just the most wonderful feeling. So that is going well. Stops well above entry, and I've already taken a little bit. For a swing trade, it's looking quite extended, but nevertheless, that's just been a really great start to the year, made up for that loss in apps many times over. This is Apple, folks. And Apple, I had a position in, and my entry probably wasn't the best. I bought this breakout up here after this inside day and the gap, and my stop loss is under that low. Those of you that have done my courses will know if you take a gap entry by the breakout of the bar after the gap, stop loss below the low of the bar before the gap, and stop loss is down there. As you can see, the trade is underwater, and let's hope this is a better looking entry, because it has come back to that last old high, and we're in the zone here. It could easily get back to this high, but there is another interesting construction here, because if and there's going to be so many lines on here you can't see the wood for the trees, I know, but if you go from there to there, we come exactly to there. And if we go put on our fib tool and we go from there to there, we get that same darn confluence again. That's where the orders were, folks. Okay, that's where the orders were. My entry wasn't good, but that was the perfect entry. That's where I should have been. So I'm sweating it out. Square. Bought into Square late yesterday after the VectorVest Q&A. As it broke up through here, stop losses underneath that low. We shall see. As you can see, there's an old high here, and it's on a buy recommendation on VectorVest. The only thing that's a bit worry here is that there's a long-term support line an awful long way south. So let's hope that that keeps going. If the general market moves, it should move as well. Ingersoll Rand, I'm still sweating out. I don't know why, really. That's the SPX we looked at, and that is another beautiful spring on SE. Again, we've got the zone, we've got this level. That's what I call the shoulder. Came back once, goes up, comes back down, takes out the low, and then broke above that level at about 191, and it's going very nicely indeed. Let's hope that it springs in the same way that FUTU sprung. So springs have been a mainstay of my trading for so long. There was a time I swore I would never mention them to anybody. I was quite protective of the technique, but as you get older, that becomes less important. So that's what I've done. The last position that I got into was Square. That was late in the day yesterday, when I actually saw the market coming off that support level. So I need to become a little bit more adventurous, and there's a good chance that I'll be getting back into Amazon again. The stop loss I kept very tight indeed, and took a little bit on Amazon, but when I brought the stop to entry, it stopped me out late in the day yesterday, and apps was stopped out for a loss. But this is not going too bad. I think the bright spot of yesterday, of course, was the gold market, and again, some of my friends tell me that this was a function of American politics as well. And as I say, I don't for a moment begin to understand them, but they felt that this could, if the Democrats got in, it could precipitate more money printing. I haven't got an opinion on that, but this broke, and I've been looking for this to break for such a long time. My advice was to buy it at above 1906, and I went through that level like a knife through butter. I have 2 gold stocks in the UK, and they've all moved up very nicely indeed. I've been asked by many people this morning, should you buy gold stocks today? My advice to them was, let's get this American politics out of the way for a day or two, folks, okay, and see what happens there. I think that even under the most positive circumstances here, this will come back and kiss. Maybe not the whole way, but I would suspect it's going to come back to that 1905, that old high, before it moves again. And that would be typical of what one would expect, and then make its way, hopefully, to that old high. And that would be really, really good. I think if that's the case, then pretty much any gold mining stock will move through the roof, okay? But the target from that remains about 2,200 from this big move, and we've waited for a long time for that to break. Silver is going great guns as well. Fresnillo yesterday, for example, was one of the highest percentage moves, and platinum also going very strongly, and our SLP is still moving up very strongly, and we've nearly doubled our money in that. In the UK, well, a really, really strong day on the first trading day after the Brexit debacle is finally put to bed, and as you can see, that last time I looked at the FTSE, it was holding on to most of that today. Vectorvest advocates buying safe, undervalued stocks that are rising in price at this time. The buy-sell ratio is pretty much up on uncharted territory. 9 times more buys in the UK than sales. This is a very, very strong market indeed. We've also got that divergence between the Vectorvest Composite and the MTI in the UK, but we haven't got any divergence between the Vectorvest Composite and the buy-sell ratio in the UK. So technically, the UK is in a stronger position for once than the American market, okay? And I've spoken about those divergences in the Vectorvest essay that subscribers should get towards the end of the week. If I do go now to the shares that I'm holding in the UK, I think I told everybody yesterday I bought a little bit of Pershing Square. That was towards the heel end of last week. Games Workshop running at 114, and this stock, there is something, as I've told you so many times before, my son in South Africa says that I'm not happy unless I've got something to worry about, but that 78% retracement is still in place. I would like to see if Games Workshop gets through that level, then we're going to move very strongly up here. So just watch that level. I added to the share under £100 and very happy with that. And as you know, we bought into that stock at Vectorvest around the 7th or the 8th of April, and it's up. It's doubled plus, it's doubled and a bit more since that. So let's just hang on to that. Sylvania is going well. Team 17 had a great day yesterday. Halma had a great day, and Pan African Resources up 8%, Polymetal up 9%. We can do with a few more of those. Cranswick's hanging in there. Reasonably happy with a lot of them. And CCC had a very good day as well. And Lion Trust, if it can get through these levels, has got a great deal of upside, folks. So reasonably happy with the longer term portfolio in the UK, and looking for some in fact fireworks out of gold stocks. I would suspect it's going to pull back, as I said a second ago, before going again. I hope this helps. I shall do another video towards the end of the week. I'm running a webcast tomorrow night. That'll be Wednesday. Let me get the Wednesday the 6th at 6:30, and I'll be looking at the VectorVest worry-free methodology. The last buy signal from worry-free occurred on the 11th of November, and the top 10 stocks as selected by the Unisearch and worry-free is up 11%. No, that's not true. 12%, and the market's up 5% in just a few weeks. So it's a methodology that, in fact, tries to find shares with exceptionally safe track records that are also growing their earnings strongly. And if you want to spend an hour on Wednesday night, I'll go through that. Please email me for the link if you haven't got it. david.paul@vectorvest.com. Trends in both markets are overbought and mature, but still going. And let's go back, as we always do at the end of this, to the VectorVest homepage. And there we are. Advance is still well ahead of declines, and VectorVest advocates caution when buying stocks at this time. I think that let that short-term trend turn back to up again, and then the bull should be in, certainly for short-term trades that last a few days. So I'm not going to do anything today in the American market until that occurs again. Okay. Thanks very much. Bye bye now.